Joe Burnett from Unchained recently published a tweet talking about how MSTR's buys don't affect Bitcoin's price. I'm going to get into his opinion. My name's Forrest Hoddle. I'm on X and Nostr, and I'm a Bitcoin coach and educator here on YouTube. So I'm going to just bring up this tweet here. Let's talk about it. He says, unpopular opinion, MSTR's Bitcoin buys don't affect the price much. Not because they aren't big, but because how they're funded. Most of their buys come from selling equity of convertible notes. Let's start with equity. So for those of you who don't know, maybe you haven't watched this channel, I've talked a lot about how MSTR raises money. One of the strategies they have is to sell shares directly into the market and use the premium that they have over their net asset value to acquire Bitcoin. So it's an accretive dilution. It's dilutive in the form of increasing the amount of shares, and that is dilutive if you're a shareholder. It's accretive in the way that even with the dilution, they're still increasing the amount of Bitcoin per outstanding shares. They have additional strategies as well, like a convertible bond that they offer, or even a convertible preferred stock offering. And these eventually become dilutive as well if they convert into the common shares. So a lot of their strategies rely on issuing equity, which is true. So this part, 100% right. So Joe continues here. If you sell 1 BTC on Kraken and buy 1 Bitcoin on Coinbase, what happens to the price? Nothing. It's an economically neutral trade. It doesn't create net new demand. It just shifts exposure. Same idea here. MSTR sells stock. Someone buys that stock instead of buying Bitcoin, and then MSTR then takes the cash and buys Bitcoin. Net, no new demand, just shift in exposure. So this is a very interesting thesis and opinion here. And I think that this is a hard thing to really prove or disprove. I think again, this is an opinion. This isn't 100% fact, because we don't know exactly why people are buying MSTR. We have to speculate that. We can speculate that, yes, they are buying MSTR instead of buying Bitcoin. Now, is that every single person that's buying MSTR? No, I don't think so. But I think people use MSTR as a trading product. They expose themselves to it because of the high volatility. Maybe they sell covered calls on it because of the premium. Maybe they hold it only for a short duration, but maybe they wouldn't otherwise expose themselves to Bitcoin. They're exposing themselves specifically to MSTR for a specific reason. So I don't fully 100% agree with Joe's analysis here, although I do think that it is likely true that a percentage of buyers, I don't know how high, maybe high, buy MSTR instead of buying Bitcoin. And in that case, they are buying Bitcoin. They are funding MSTR to buy Bitcoin for them, which is an interesting kind of a concept here. So Joe continues here talking about convertible notes. He says, similar story. Hedge funds buy the notes, but hedge by shorting MSTR, selling MSTR shares. They use the notes, just a little explanation here. They use the notes, the convertible bonds, as their long position, and they hedge that long position by shorting the actual underlying common stock. I do have 2 videos now, maybe 3 videos talking about how this all works. The Delta Arb traders, talking about specifically about MSTR, as well as I've talked about GME, because they issued a 1.3, which was upsized to $1.5 billion convertible bond as well, and saw a huge amount of short interest, which excited their audience, but not exactly the same squeezable shorts that happened prior in GME. Anyway, I digress and I continue here. As MSTR rises, they short more. Eventually, those notes convert to equity too. The reason they short more is because the delta changes and they have to, they want to be delta neutral, so they continue to short the position compared to the delta of the underlying convertible bond that they have, which increases in price and value as MSTR rises. So even those buyers are functionally like equity issuance. because these notes end up converting in most cases. So Joe continues, in both cases, the capital flows into Bitcoin, but only after flowing out of a Bitcoin proxy. No real net inflow into the asset itself. Now, what does move the price? New capital buying Bitcoin without selling another Bitcoin proxy. Apple, GameStop, the US government, someone selling their house, or reallocating savings. Even Strike and Strife are closer to that, especially if the buyer is rotating out of bonds. So I've mentioned Strike. Strike and Strife are both preferred stocks that are offered by MSTR. And they are targeting a different demographic. They're targeting dividend, income-orientated folks, maybe people that would invest in bonds and preferred stocks. They are going to buy these. So that might be new capital that otherwise wouldn't allocate themselves to Bitcoin or Bitcoin proxies. They're just seeking a high percentage return based on dividends. Joe continues here, MSTR's strategy is brilliant and Saylor is a great Bitcoin educator, but from a market impact perspective, the billion-dollar Bitcoin acquisitions are more nuanced than people think. I think he ended this perfectly. I think that is true, 100% true, that the billion-dollar Bitcoin acquisitions are more nuanced than people think. I've talked about this in the past. There's a few different reasons that they don't affect the price as much. And one of those is just that Bitcoin is a pretty big market now, and there's a lot of people buying and selling, and that will decrease the volatility if there are the sellers that come out to match the buyers, which is what we're seeing. We're seeing volatility in Bitcoin on a historical level decrease. We're seeing price move in these pretty condensed channels, and that's because sellers are coming out to match those buyers. And those buyers might be, Strategy or the OTC desks that need to source the Bitcoin to then sell to Strategy. Now, I think where this where this opinion kind of begins to fall apart is the convertible bond buyers. They are captive buyers. They are not buyers that would have bought in Bitcoin instead. They are forced to, because of mandates within their industry, they're forced to expose themselves to convertible bonds. There's no other products out there that would expose them to Bitcoin necessarily, unless it's, again, like a Mara convertible bond or potentially a GME convertible bond when they actually buy Bitcoin. So I think that those people are not necessarily Bitcoin buyers otherwise. I think there are also a group of investors in the common equity as well that because of regulations based on where they live or what markets they're exposed to, they can't actually allocate themselves to Bitcoin, whether that they have some captive capital and they can't buy the ETFs through there. So it's either MSTR or some other equity that doesn't expose them to Bitcoin at all. So I think those people as well, those are new buyers into that. And maybe that captive capital is growing, as somebody works, and maybe it goes into it like a work savings account or something like that. And they're able to allocate to MSTR, but not to potentially an ETF. So I think those are new buyers potentially. I think a lot of this is a little bit more nuanced, and again, that is what he said at the end. But I do think that I don't think it's one for one. I don't think it's net. I don't see this as no new demand. I think there is new demand on Bitcoin because of captive allocators that are forced, or not forced, but their best option is to buy some sort of MSTR product as opposed to their ability or lack of ability to actually buy Bitcoin itself, either through an ETF or directly. Now, this is up for debate. I'd love to hear your guys' comments, questions. I thought this was an interesting perspective, and I do think that there is some side of this that is true. I just think maybe it's being potentially overstated by the wording of Joe here. Maybe I'm interpreting it that way, but I do think that other people, if you read the comments, have interpreted it that way as well. So I don't think I'm far off base of what his thoughts were in this tweet. If you do want to get yourself some actual Bitcoin, I highly recommend Bitcoin Well. They're available in Canada and the US. And if you use my link in the description, you'll get some free Bitcoin on sign up. They have non-KYC options available in Canada and the lowest spreads and fees for a non-custodial exchange. If you want to preserve your seed phrase for generations to come, I recommend checking out Stampseed, Titanium Seed Plate Kit, and using my code BTC-NotCrypto15. And if you need some help with Bitcoin basics, I do one-on-one Bitcoin coaching, and you can check out the link in the description for that, and I'll help you along your Bitcoin journey. Thanks everyone for watching, and we'll see you in the next episode of Bitcoin Not Crypto.